interviewing the leading private equity executives and unlocking the secrets of success. Welcome to the Private Equity Podcast with Alex Rawlings.
Hello, everybody, and welcome back to the Private Equity Podcast. Joining us today is Alan Goldfarb, the founder and managing partner of Orangewood Partners. Welcome, and thank you for sharing your insights.
Alex, thanks for having me.
Perfect. Well, those who are watching us on YouTube or LinkedIn or wherever else you watch the video, you'll notice that I'm in a slightly different location. We have moved offices and I'm stuck in a room at the moment, not in the office, but we will return to normal procedure rightly soon. But there's a bit of building work going on, which nobody needs to hear. So to get stuck into usual procedure, Alan, if you could give us a 60 to 90 second breakdown of you, please.
Sure, happy to do it. So Alex, I grew up in a suburb of Cleveland, Ohio called Orange. Orangewood is the neighborhood I grew up in Orange, Ohio, and is the name of our firm. I started in private equity about 20 years ago now when I joined the Carlyle Group. And like much of the private equity industry today, and probably many of your podcast guests over time, I went into private equity after an investment banking analyst program, but I had a bit of a unique twist and really interesting opportunity early on in my private equity career. At Carlyle, I was hired into a position at the firm where I had a really unique opportunity to work directly with and for many of the management committee members and some of the founders of the firm, including David Rubenstein, as they were looking to build out the organization. So not only did I really learn how to become a great private equity investor at Carlyle, but I had a front row seat into the business building side of Carlyle as well. And then fast forward several years, I started Orangewood in 2015 with the backing and support of many of the people that I'd worked with and for over the years. And we're still really, really fortunate, Alex, to have the support and backing from many of those individuals and family offices that were there from the beginning of Orangewood. And today we have a bunch of other family offices and institutional investors 7 years after our founding. At Orangewood, we look to invest in a variety of industries. Generally we try to focus on areas where we've had a long history of success. So in other words, we're not trying to recreate the wheel. If we've done something well in the past, we try to do it again. Some of these sectors include consumer, healthcare, services. And within these sectors, importantly, we focus on certain themes that have great long-term trends. They're not cycles. We're not trying to market time things, but we believe that have great long-term trends. Some of these sectors have included over the years, we've invested and continue to invest in a theme we call data demand crippling supply. For the last decade, we've been one of the larger investors in the cell tower industry, as an example. We're big believers in the ongoing development of food service, sophistication, and convenience. Within that theme, we've become one of the largest owners of Taco Bell franchisees in the United States. Another big area where we focus is the convergence of consumerism and healthcare, and also we're big believers in the ongoing development of health and wellness. And even before COVID, we've been investors, as an example, within this theme in the urgent care space. So in addition to those themes within those industries, really importantly, we also look to partner with great management teams and entrepreneurs, but we look to be more than just a financial investor. We look to be a real strategic partner. For instance, in 100% of our deals, the management teams and the founders of the companies have rolled into the deals with us. And in fact, the average rollover, Alex, has been 90%. And in one instance, the founding family not only rolled 100% with us, but they actually invested more alongside of our investment. So we believe this is something fairly unique to Orangewood and how we go about our investments. and something we're really excited about continuing going forward.
Okay, perfect. Thank you very much for that detailed insight there, Alan. What one mistake do you see private equity firms or portfolio companies making, and what actions would you suggest or would you take to correct them?
So over the last 2 decades of investing in private equity, Alex, it's there's a series of mistakes, but we try to go back and look at what mistakes do others make, what mistakes have we made, and so we don't make that same mistake again. And what we've seen is really 3 things that most private equity firms where they've gone wrong. And those 3 areas are over levering a business first, and assuming interest rates will stay low forever. Second, assuming multiples will just continue to increase and we don't have to do much with the business, but if we buy it at X, it'll be worth, because of a multiple expansion, 20% or 30% more, down the road. And third, assuming the economy will just continue to grow and there won't be any bumps in the road and things will continue to be sunny days out there. And we've seen that doesn't work over a long period of time. And so at Orangewood, we talk about finding good companies with bad balance sheets, but we never want to create those. So in other words, we're not putting too much leverage on any of our companies. And we also talk about setting up our businesses to be able to play offense and not have to play defense. Again, what I mean by that is not having too much leverage. So in a troubled economy or in a down market, we can be offensive and look to continue to grow. I'm also always reminded, I mentioned I was fortunate early in my career to work for David Rubenstein of the Carlyle Group, and he's always reminding many people that when he worked in the Carter administration many years ago, interest rates were close to 20%. So over the last 10, 15 years, interest rates have been at record lows, but I'm always reminded that they can't stay that low, or they likely won't stay that low forever. And we're certainly seeing that shock to the system right now. So in all of our underwriting, Alex, we take these lessons learned and reviewing history of what other private equity firms, like you said, what mistakes have people made. And we look at 3 key things. One is management teams. Management teams that can succeed in all market conditions. We look at rainy days and sunny days, and we're going to have rainy days, we're going to have sunny days, and we want to make sure management teams are well equipped to perform in good days or bad. And just in the last few years, we've had COVID on one end, we've had a war breakout, we've had record inflation, employment levels, and hitting many companies. And so you really need to have management partners that can react and respond and rally their teams no matter what weather it is outside. For instance, we have a CEO partner who we partnered with him just in the last year, and he founded his company 40 years ago, and so has certainly been through ups and through downs in the economy and world events. And he's built a business to close to 100 million of EBITDA today. And, again, someone that has persevered, and we're really excited, to be a partner of his going forward. Leverage and interest rates is the second thing I mentioned just before, that we never want to over lever the businesses and make sure interest rates. And in fact, at Orangewood, at closing, half of our businesses, which is very atypical for most leveraged buyouts, half of our businesses had 0 leverage at close. And where we do have leverage with floating interest rates, we always look to hedge. So we never take floating rate interest rate risk. So in fact, many of our investments today that have floating rate debt that is hedged, we're well in the money from the hedging. And we don't have to worry about the cash flow impact of rising interest rates. And then the third thing that we look for, non-cyclical businesses, and importantly, underwrite true cash flow and what we believe can be growing cash flow. For example, one of our businesses that we bought 4 years ago, we invested with and partnered with the founder. Before COVID, before a lot of these market shifts that I'm mentioning, in the consumer multi-unit space. And we were able to, through COVID and through this market that we're in today, roughly double our profitability, and our cash flow has been growing alongside of that. And we're generating 25 to 30% cash on cash returns today. So again, those three things are things that we try to focus on to make sure we don't make the same mistakes that we've seen, from others in the past.
Love that. Very detailed explanation there, Alan, and appreciate that. I know we kind of gave a lot of insight into what I regard as the lower middle market, as opposed to large cap type businesses, and most likely because that's where Raw Selection plays with regards to its work and executive search. You mentioned obviously you work with Carlyle Group under David Rubenstein. I saw from your LinkedIn 2003 to 2010. What have you learned from working at one of those larger private equity firms that maybe those listening in smaller and mid-cap type charge firms could take and utilize from those big big type organizations such as Carlyle Group?
Yeah, so very fortunate to have had that unique opportunity to work at Carlyle with many great mentors and friends. When I started at Carlyle, it was one of the larger private equity firms, but obviously not nearly as large as it is today. But really having a front row seat to some of the best private equity investors and some of the best business builders of all time was something that I really take away from it. And what we like to say at Orangewood is we try to bring the best institutional practices that we were able to learn from firms like Carlyle, and bring that to Orangewood while maintaining our entrepreneurial culture. And really, there's a few aspects of that. First, on the investing side, like I just mentioned, you could have a great management team in a troubled industry or with a troubled business, and you're going to figure out how to work its way out. On the flip side, if you have a management team that isn't up for the whatever issue or that arises in the day, even if it's a great business or a great industry, things could be hurt. So your management teams, your partners, what you bring as a strategic partner is very, very important. And what I mean by strategic partner is there's a lot of firms out there that have a lot of money. And so if a company is just looking to sell its business to a firm for the most amount of money, we're probably not going to be that partner. What we try to do is really become a true strategic partner and bring operational, functional industry expertise to these middle market or lower middle market businesses, and really create a strategic asset that 3, 5, 7, whatever years down the road becomes a really, really attractive business for larger private equity or a strategic investor or strategic company that needs to make an investment. At the same time, while that's on the investing side, the business building side is very, very important. And the thing I learned, and Bill Conway, one of the other co-founders of Carlyle, used to always say this at any meeting, whether it was an internal or external meeting, is we work for our investors. And that's something that's always been ingrained in my head from day one at Carlyle. And without our investors, we don't have a business. And so we put as much, when I talk about our institutional practices, we put as much time and effort on making sure we are doing what's best for our investors. In fact, within our own team at Orangewood, every memo, every conversation, I always remind the team, or I try to remind the team, that every action we take, whether it's in the office or outside, we have to remember we're representing Orangewood, and we have to think about, is this the best thing for our underlying investors? So I'd say both on the investing side and the business building side, with our investors in mind, is something that will always be in the front of our minds at Orangewood.
Okay. Other than that mindset, is there anything in particular that you've taken that is particularly unique from a large cap business, whether that be process systems? Have you adopted quite a lot of that? I'm sure you've got rid of, as any big business would have, a lot of the red tape and bureaucracy. I don't know Carlyle particularly well, but I'm sure that's there being a big company. Is there anything else that you would say, look, yeah, if I was a smaller firm and I hadn't had that exposure in a large PE firm, I'd probably be looking at this because it makes life a lot easier and kind of makes, you guys best in class in the small and mid cap space.
Yeah, so I'd say there's three things. One is on the diligence side. We still work today with the same third-party diligence providers. We work through the same process of whether it's third-party accountants or lawyers or whomever it might be. And so we make sure we don't cut corners, and we make sure our diligence is, top notch in the same ways that all large institutional private equity, firms do it. Second is partnering with these management teams. Oftentimes we could sit back here and just say once a quarter, send us information, and we'll tell if the companies are doing great or not so great. And instead, what we do, and we make sure we set this up the right way from the beginning, is we have a stable of tremendous operating partners that are a true extension of our team, many of whom some of us at Orangewood had worked with at firms like Carlyle or other firms over the last 10, 15, 20 years. And we really make sure that from the beginning, we could set these businesses up for success. And so whether it's helping, in this world we're living in today, recruiting, retaining, motivating good young talent is the biggest challenge that everybody we talk to, any company, any management team, what they have. And we're very fortunate to have a partner in Valerie Davison, who's one of our operating partners, who is the former chief people officer at many very successful and large organizations, where she now is not just helping Orangewood, but she is available and is actively involved in helping many of our operating companies. So that's the second thing is, becoming so diligence. And then the second is the strategic partnership. And then third is where we want to take these businesses. So again, I mentioned earlier, Alex, some private equity firms, I think in the past, when economy was growing and you could just lever businesses and multiples were expanding, you didn't have to really do much to create a strategic asset to make money on the exit. But we believe, and this is something that was always taught, for the last 20 years from the Carlyle days, is what is the game plan for the business and where do we want to be 3, 5, 7 years out, and how do we get there strategically? Investments in people, in processes, in systems, and how do we really take this lower middle market or middle market business and make it into a highly strategic asset? So those are the three things that we've fortunate have had that experience and that exposure early on in my career, and that we've brought over to Orangewood.
I appreciate that insight, Alan, and no doubt everyone listening appreciates that candidness as well. Sorry to interrupt here. Just a quick note to highlight our new sponsor, Grata. The private equity market is rapidly shifting to a data-driven, proprietary deal sourcing standard. Grata provides the window into over 7 million middle market private companies. Contact Grata so you can access the market first. Request a demo at www.grata.com. Now back to the podcast. So you mentioned actually, and I'd had a look at the team on the website and noticed, and we've had various different operating partners on the podcast previously and had many discussions about that model being stronger in the States. And as that begins to move into Europe, as we use the term portfolio director, I think we're still, and I say we as I'm based in the UK, but I think as Europeans, we're still pretty much relying on the investor approach and moving them into the operating partner equivalent role, or them being the portfolio executive that supports it. And obviously investors have a lot of exposure and experience across various different businesses. You seem to have quite a large team. I usually see of the team of your size maybe 2 or 3. I think, well, I didn't actually count the number, but there's definitely more than 10, I would guess, on your website of mainly C-suite executives. And obviously, you've already mentioned your use of the particular individual on the people side and the talent side, which obviously I would agree is an incredibly important element. Why have you gone down that model? And what have you learned from doing so that's obviously benefited Orangewood Partners?
Yeah, so when we tell people that we could be a great strategic partner to them, we need people that could help be that strategic partner. And the reason we have so many is probably twofold. One is not every situation requires the same expertise or the same partnership. And so having different industry and different functional and different operating expertise, we could figure out which is the right lever to help this company pull, whether it's real estate advisory or relationships, or executing on, if we have a multi-unit business, executing on sale leasebacks or negotiating leases, or how to find the best real estate locations. We mentioned people. We mentioned, tech enablement for a lot of these businesses. So these are different areas that not the same person could have that expertise. So we really try to bring that in. And the other thing is, everyone on our operating partner board or staff or team is someone that at least one, if not a few of us, have worked with and had success with in the past. And one of the foundations of Orangewood, we call it Orangewood Partners for a reason, is it's a real partnership model. And we enjoy working with people, and the people that we work with typically, I think, enjoy working with us. And so when we've had success, we try to have success again. There's some operating partners and CEOs that we're working with today that we've done a number of deals with together. In fact, one of our CEOs today, we're on our third deal with him. One of our operating partners, has been a mentor and a great friend since the Carlyle Group. He was one of the folks who hired me. He used to run the credit business at Carlyle. So we work with people that bring real great experience, but also have a real interest in helping us and helping our underlying portfolio companies.
It makes sense. So might be a question for your C-suite exec or head of people within your operating partners, but what three attributes do you believe, Alan, makes a top performer?
So this is something, I like to study history and people and success. And this is something that I talk to my mentors a lot, and I try to just observe as well. And the three areas that we talk about all the time here that make a good attribute when we're trying to hire people or partner with people. First is hard work and preparation. I think they go hand in hand. And two of my favorite quotes, I put them in our quarterly letters quite a bit, are the harder you work, the luckier you get. Luck is not a bad thing. And the second quote is, chance favors the prepared mind. So the harder you work, the luckier you get, and chance favors the prepared mind. Go with the first point. The second thing is learn from mistakes. One of your earlier questions, Alex, is what mistakes have we seen other private equity firms make? And what have we done to try to not make those same mistakes? We do look at that. And sometimes we make mistakes. We make mistakes all the time. And, I'm a big sports fan, and, Michael Jordan is famous for talking about missing more than 9,000 shots in his career, and 26 of those being game winners that he's missed. Unfortunately, it wasn't 27. As a Cavs fan, he beat the Cavs on a game winner, but I still am a Michael Jordan fan. And in the investment world, we all make mistakes, and it's important to learn from those mistakes and not miss that same shot again when you get that chance. And then the third thing is communication and teamwork. Business is truly, in my mind, a team sport. And so communicating, working together, sharing credit, having humility are all key pieces that we look for in our teammates and our partners.
I love all of that, Alan, especially there's a few notes here there. You'll regularly hear me in the office is, if anyone ever says, "Oh, that was lucky," or "that was unlucky," I always respond with, "There's no such thing as luck." The harder you work, luckier you get. I think that's quote from many places, but it would just remind me of Harvey Specter, albeit fictitious, within Suits, as his moment within the poker table, and that certainly makes me smile. And then you've also mentioned I've just lost my Keen, cut this bit out. I've just lost my train of thought there. What was the second one you mentioned, Alan?
Learning from mistakes.
Learning from mistakes. And then there's the restart this, Keen. And then there's the second part, which is learning from mistakes, which we've got values on our wall in Raw Selection. One of them is the actual poster that says Michael Jordan's one of this display or metal one, and it says about the 9,000 shots that he's missed, and we're big encouragers of that. And I think it's difficult as leaders to encourage that, especially in environments that we're in, but we don't learn unless we go out there and we make mistakes, as long as we're not consistently making them. So definitely loving that. What do you love about the private equity industry, Alan, and equally, what do you dislike about it?
So, well, I'll start with the second part of your question. There really isn't much I dislike about private equity. I really enjoy what I do, and the private equity industry has been great to me and my colleagues and my family, for many years now. So I really can't say anything bad about it. But in terms of why I like it and what I like about it, there really are so many great people and companies that I get to meet with and work with every day. Many of my former and current partners and colleagues have become my closest friends. And I also really enjoy meeting new people and finding ways to work together, partner together, and create new opportunities and try to have success together. Oftentimes, as I've mentioned throughout this conversation, Alex, is we partner with entrepreneurs and management teams. And in many cases, we've done it several times over and over again. There's nothing more satisfying by helping someone, an entrepreneur, turn his or her life's work, and in some cases, their family's life's work. We've partnered with third generation family-owned businesses over the years. And that is so satisfying in helping them take their business to the next level and how they identify success and looking at us as their partner of choice. And as I mentioned also earlier, Alex, is something that's really satisfying and something that I love about private equity is we have investors, what we call limited partners in the private equity world. And without them, we don't have a business. And many of them are institutional investors that are state pension funds or teachers unions or organizations that really have a great purpose. And if we do what we're supposed to do and have success in our investment strategy, the underlying constituents of our investors are better off. And that is something we have to think about, and we do think about every day. And that is something that is really, really satisfying.
Excellent. And I'm not going to let you go, Alan. There must be something you dislike about the private equity industry.
So, Alex, the one thing I do think about, and maybe this is something that I guess I could say dislike, is some people think about private equity as a place where you go in and there's been some trade rags written about this, where you go in and you cut costs by taking away jobs and doing things that isn't great for the overall economy or for the employees. But so I think that some of that view or reputation is misguided. In fact, at Orangewood, I'll give you two tidbits of things that we've done. In the last year alone, our companies have grown the employee base by more than 20%. So we've created jobs, not taken away jobs, while making these companies more profitable. And so it's not a rip, or cut cost strategy. It's a growth minded with profit, growth strategy. The second thing we've done is really try to create, not just at Orangewood, but our underlying portfolio companies, really try to create a culture of giving back and helping the communities that we serve. And so one quick example is, we have a portfolio company that's a Taco Bell operator in Louisville, Kentucky. And Louisville was hard hit, as many markets were during COVID. And many are, in fact, I think all or most of the schools were shut down. And many students and kids in the area, that's where they were able to get their warm meals, were from schools. Without the schools being open, many of these children didn't know where they would get their next warm meal from, which was, very troubling to us. And so we actually received an inbound idea from one of our local employees saying, hey, what if we did something where we could provide warm meals to many of these kids and families in the neighborhood? And we thought this was a tremendous idea. We ended up partnering with the Boys and Girls Club in Louisville, Kentucky. And on Fridays, we would our team would show up in a van and serving thousands of warm tacos to the kids and the parents that lived in the area. And just seeing the smiles on the face and having the kids being able to play outside while being fed was just an amazing thing. So there are a lot of things that we do that sort of fly under the radar, but that go against some of the overall feeling of what private equity really does.
Yeah, I think there's a negative push, and I was having this conversation actually over text over the weekend with one of our previous guests, Paul Doyle, and he was mentioning, the amount of goodness, probably not the best word, but greatness that the private equity industry does, and in creating jobs and driving supply chain. I'm a big pusher of that, and I think the more we can get that message out, certainly the better. So definitely agree. I think you've just got away with just a dislike there, Alan, but it sounds like you love this industry. Incredibly. So I definitely admire and believe that's a great thing. So I'm going to guess, based on what you've said earlier, pretty well read, and you've obviously thrown some quotes out, which I'm sure you've kind of read, watch, listen to various different avenues. What would be kind of your recommendations on influences that people should go to with regards to, be it a book or a podcast, a YouTube channel, anything else from there?
Yeah, so I read a ton. Like you mentioned, I like history, I like business, and quotes are something that ties a lot of things together. I listen to tons of podcasts, and so just anything I could get my hands on, whether it's sports success or business success, how people have done things, because as I mentioned, I do think there's a lot of overlap of sports and business and family and how people do things, and there's no right or wrong answer. There's different ways, but trying to figure out what works, for others, and how you can take the best of all worlds is something I always think about. But really, my two biggest influences, I'd say, are one, my family, and two, my mentors. And so if encouraging people to do things, sometimes you can sit back and read and listen a lot, but oftentimes doing the opposite, which is going out there and taking and making time to figure out how you spend time with your family or how you spend time with the mentors. I'm very lucky to have amazing parents, siblings, a great wife, and four wonderful children. And all of them have helped me become what I am today, have helped shape what Orangewood is today. And I'm always learning from them. I've mentioned some of my mentors and great bosses that I've had over the years. I really have had this great privilege to have worked with some of the best business builders and private equity investors of all time. And I'm always trying to find time to go out and sit with them in person. And whether it's for a coffee or for a meal or just 30 minutes of free time to talk about business or life or whatever it might be, and just learning from them. And so I think nothing can take the place of an in-person conversation. Zooms are fine, but an in-person conversation, you just learn so much. So having that opportunity is something that always drives me to learn.
Okay. Brilliant. Well, look, I really appreciate your time here, Alan. If anybody wants to reach out to you or get in touch here, how best they do that, please?
So would love to speak to anybody who would like to reach out. And Alex, thanks for having me here today. Our website is www.orangewoodpartners.com. You could reach us through that. And I'm also available through LinkedIn. You could send me a message that way. So happy to speak to anybody that would like to chat.
Perfect. Well, we'll put that all in the show notes for anybody that didn't quite catch that. That'll all be there for you to click onto. So, Alan, thank you very much for joining us. I really appreciate your insight. You leave us with a lot of value, both for private equity professionals, portfolio executives, but also really appreciate that insight into that kind of private equity is a mythical world, but when it comes to the big firms, everybody's pretty tight-lipped with regards to what they've learned and what they've accomplished. But it sounds like you've had a lot of inspirational leaders and built a very strong network of people from that, and lots that everybody can take from this podcast. So thank you very much for sharing all that you have.
Thank you. Really appreciate you having me, Alex, and look forward to speaking again soon.
Perfect. And as always, thank you, everybody, for joining and listening in with us today. Should you ever need support for your private equity professionals or portfolio executive hiring across Europe and North America, please do reach out to me at Real Selection. And if you haven't done so already, please do subscribe and you'll be notified of the next podcast, which comes out every 2 weeks. But till the next time, keep smashing it. And thank you very much for listening. Alan, that was great. Thank you very much.
Thanks, Alex. Appreciate it. Thank you for listening to the Private Equity Podcast on www.raw-selection.com.